Why should you operate as an S-corporation? Pluses and minuses. Upfront warning, if you are thinking of what kind of entity you want to do business as, or you're thinking of changing, talk with your CPA and attorney. The S-corporation form of doing business is one of the favorite entities for small businesses, with good reason. Almost all of our clients operate as one. There are a few downsides as well. First, the good part. Having formed a corporation under the appropriate state law, probably your main operating state, you've done the first huge step in protecting yourself and your personal assets. As long as you operate the corporation as a corporation and follow the law, you have protected your personal assets from liabilities created by the business. Basically, if the business or its employees create a liability, you are not personally responsible for that liability. A perfect example is a restaurant. The corporation owns the restaurant, hires the employees, pays the bills. A customer falls on a wet floor in the restroom and sues for damages to an injured back. The corporation may be held liable and forced to pay for the customer's injuries, but you, as the owner, are not personally liable, and only the assets of the corporation are at risk. We'll cover keeping those assets to a minimum in a future post. The S part of an S corporation is a tax election you make with the Internal Revenue Service. That election must be made within 75 days of incorporating or within 75 days of the start of any tax year of the corporation. You make the election with a Form 2553 that all owners must sign. There are some restrictions on what corporations may become S corporations, and your CPA or attorney can explain those in detail. But the vast majority of new corporations qualify. What the election does is to allow the corporation to pass corporate income, losses, deductions, and credits through to the shareholders for federal tax purposes. Shareholders then report these items on their individual Form 1040 each year. One of the big tax benefits is that you will be able to take part of the corporate income as compensation, reportable on a W-2, and the rest of the income reportable on a Form K-1. Distributions you have made show in the income reported on the K-1 and are taxable as income to the shareholder, but not as self-employment income and therefore not subject to Social Security or Medicare taxes. There may be some state taxes that affect the calculation, but basically you can take half the profit of the corporation as compensation and half as distributions. So if you are under the maximum for Social Security taxes, this can save you as much as 15.3% of the distributions that would normally have been paid as Social Security and Medicare taxes. If the total income you're able to take out of the S corporation is $110,000, then you could be saving $8,000 in taxes and have more liability protection than a sole proprietor or a general partner. Also, tax credits, such as the FICA tip credit, flow through to the shareholders as personally usable tax credits on their 1040, offsetting other income. There are some downsides to being an S corporation in terms of corporate flexibility of stock types, types of owners, but it seldom affects small business. The most common downsides are restrictions on certain corporate deductions that concern 2% plus shareholders. These include health insurance premiums paid for shareholders that own more than 2% of the stock. Those premiums are added back as income to the shareholder, but are then deductible as insurance for a self-employed person on the front of the Form 1040. There are other complexities and costs of being a corporation or an S corporation, including the cost of filing a corporate tax return. However, most small business owners come out better financially being an S corporation than not. In these times of being sued by anyone for anything, including the temperature of coffee at McDonald's, not being incorporated and in business is not smart. Before you incorporate, work with your CPA and attorney. You'll need both. Rules change constantly, and every state is different. As always, there is no substitute for professional advice on your exact situation.